India is making headlines again, not just for its growing economy, but for standing out as a stable and promising market during a time when the global financial world is dealing with uncertainty. While many countries face recessionary fears, rising debt, and unstable markets, global financial giant HSBC has called India a bright spot amid this chaos. But what does this really mean? And more importantly, which Indian stocks is HSBC betting on to outperform in these volatile times? In this video, we'll break down HSBC's latest investment strategy, their top 5 stock recommendations, and what this could mean for smart investors like you. Let's dive in. Right now, global markets are going through turbulence. Inflation remains a key concern in Western economies. The U.S. Federal Reserve is still treading carefully with interest rates. European markets are facing slow growth, and China continues to deal with structural issues that dampen investor sentiment. But amid all this noise, India has emerged as a relatively stable and resilient player. HSBC's recent research positions India as a potential safe haven, highlighting its robust macroeconomic fundamentals, improving corporate earnings, and continued foreign investor interest. According to HSBC, India's equity markets are well-positioned to outperform many global peers, thanks to several favorable factors such as controlled inflation, policy continuity, and sustained economic growth. HSBC's outlook on Indian markets. Now, while HSBC maintains a neutral view on Indian equities as a whole, it still sees significant pockets of opportunity. In fact, they've set a Sensex year-end target of 82,240, showing optimism toward the long-term potential of the Indian market. Q4 earnings have been stronger than expected, with the FTSE India ex commodities EPS rising around 10% year-on-year. The consumer discretionary sector led the pack with a 14% jump. However, the performance has not been uniform. The FMCG sector underperformed, while IT and banking posted more modest gains of around 5 to 6%. One critical point HSBC highlights is the impact of rate cuts. While lower interest rates are typically good for equity markets, they may put pressure on banking margins. At the same time, a softer US dollar and improved foreign inflows are positive signs for Indian equities. HSBC's top 5 stock picks in India. So which companies does HSBC believe will lead the way? Let's take a look at their top 5 stock recommendations in India. HDFC Life Insurance. HSBC sees strong long-term value in HDFC Life. The company is expected to deliver embedded value growth of 15 to 16% CAGR. Its leadership in Tier 2 and Tier 3 cities gives it a strategic edge. Life insurance penetration in India is still relatively low, and HDFC Life is well-positioned to capture this expanding market. Ujjivan Small Finance Bank. Despite being under the radar for many investors, Ujjivan SFB is on HSBC's radar due to its attractive valuation, currently trading at just 1.3 times its FY27 estimated book value. The bank benefits from favorable regulatory changes and has demonstrated operational efficiency in reaching underserved markets. Godrej Consumer Products. In the FMCG space, Godrej Consumer Products is a key player. HSBC notes its innovative pricing strategies and growing market share in segments like home insecticides and detergents. The company is adapting well to changing consumer behavior and is expected to maintain strong growth in both domestic and international markets. UPL, United Phosphorus Limited. UPL is going through a transformational phase. After a period of margin compression, the company is now entering a recovery cycle. With debt reduction on the cards and improved operating leverage, HSBC sees this agri-input company as a compelling growth opportunity. UPL is also expanding its global footprint, giving it additional momentum. GAIL India. India's clean energy push is giving state-run GAIL a new growth trajectory. With increasing demand for natural gas, the expansion of pipeline infrastructure, and the possibility of favorable gas tariff revisions, GAIL is in a strong position. The company also benefits from its diverse business model, including gas transmission, petrochemicals, and exploration. What ties these 5 companies together is a theme of idiosyncratic growth. These are not broad market plays. They are specific businesses with strong fundamentals, differentiated market positioning, and sector tailwinds. HSBC's strategy is clear. Instead of spreading investments thin across the whole market, focus on companies that can thrive in their niches, regardless of broader volatility. Other key themes investors should watch include continued foreign portfolio investor inflows into India, declining bond yields, which make equities more attractive, policy continuity from the Indian government, which helps long-term planning and business confidence, and increasing retail participation in the markets, driving liquidity and momentum. India's market may not be immune to global trends, but it's certainly showing signs of resilience and smart growth. HSBC's recognition of India as a bright spot is more than just a compliment. It's a call to investors to pay close attention. The 5 stocks HSBC recommends: HDFC Life, Ujjivan Small Finance Bank, Godrej Consumer Products, UPL, and GAIL are not just bets on the market. They are investments in India's evolving story of innovation, inclusion, and infrastructure. So, whether you're a seasoned investor or just getting started, this could be the time to explore these opportunities with a fresh perspective. And if you want to stay ahead in your investing journey with more such insights, don't forget to like this video and subscribe to the channel. We break down complex financial trends to help you make smarter decisions. Thanks for watching, and we'll see you in the next one.